Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free video report for Monday, April 23rd, 2018. Not much went on in the market tonight. I'm actually going to be putting out another video report during the week, but what I really wanted to do is go through what has really taken place this year, where we are, what has really been happening lately, and what we see moving forward. And we have a lot of new people that have joined our Sentiment Timing world, and I want to go over really our predictive analytic model that we use. And we use a combination of time, sentiment, and technicals to predict when the stock market is going to, or the S&P 500 is going to reverse, whether it be a top or a bottom. And the technicals gives us an idea as far as where that is going to take place. And we do that through just regular bullish, bearish divergences, wave structures, support, resistance, and predictive wave structures that have been in place, as well as patterns. And we use the sentiment to confirm whether the low or the high is going to be it should be coming into place. And that's because what's going to happen is, if we're looking for some type of top, the sentiment is going to be extremely bullish. It's just the way things work, because the majority is always going to be on the wrong side of the move. And when we're looking for a low, sentiment is going to be extremely bearish, because everybody is looking lower, and that's typically when we see these reversals take place. So let's go through what has happened this year. And this is January 9th, 2018. The whole time we were saying that we were looking for the market to make a top, and what we were saying here back on the 9th was that there was a projected trading low on February 13th to the 17th. So if you remember, during that time period, the market was just heading up, but we were looking for a low. So when you were buying that market that whole time, you had to know that you were on thin ice, because the low was projected here, not the high. And that means that the whole time that we were moving up, that the market could have turned at any time. And when it did, this was the time period that you wanted to look for a low. And if we go back and take a look at what took place then, notice how everybody was bullish on this market. Everybody was looking up. Nobody had a reason on why this market should drop. And if we take a look at things, the wave structure came into play, where we were right at the, we made 5 waves up. We were into a resistance area. And this is when we put out that report saying that, the low was supposed to be coming here. And we went up, and once we went through this support level, this was the trigger on the short side. And from there, we know what took place. The S&P dropped almost 300 points in a very, very fast. So from there, let's take a look at what happened. And if you look here, and remember, what he was projecting was that we were looking for a low between February 13th and the 17th. And if we look at what took place as far as this was right in that time period. So remember, this call was made here on January 9th for the low to come in here. And this is what we talk about with predictive analytics, is that, even though the market was moving up, we didn't have any kind of sell triggers, so it didn't get you short until we took out these lows here. And this was where you got short, and from there, this was the end result. So let's move on and carry on into February 13th, because if you remember, that was when we were looking for that low to come into play. And the profiles continues to prefer bounces into 3/8, into March 8th. So let's take a look and see what's playing out here. This was the March 8th here, and we had a 99% bullish reading, and that's after everybody was bearish on this market. And if I scroll down and now go to our chart here, you can see this was the March 9th was when he was looking. It said March 8th-ish in that area. This was March 9th. We had a little decline and then a bounce up. That was on the 12th. And from there, we had a 240-point drop. So again, let's go back. This was on the 13th. That he was predicting that we were going to be getting a bounce into the 9th, and what we were really looking for on that was, if I scroll and go to the next one, was that there was going to be actually, I'm sorry, I got to go back to this one. So 3.8, and then what we were looking for is the weakness to continue into early April, which that's exactly when it did on that. So if we move forward now and go into the early April, so it was he's looking for 2 time frames, and again, this is again on April 3rd that there was 2 time frames that he was looking for the high to hit, and that was April 17th and the 18th. And if we go in and take a look, remember, sentiment was low this entire time. Nobody believed in the rally. And from here, we got a 93% bullish reading. Now, remember, everybody's going to be, most retail traders are going to be on the wrong side. It's just the way that this market moves. It's always moved that way, and you can see the way sentiment is. Everybody gets bearish at the lows, and they get bullish at the highs. And that's one of the reasons why so many people have difficult trading this market. So if we take a look here, this was April 18th that it came in, exactly when Woody was expecting it, between the 17th and the 18th, and again, this was 2 weeks before, and the top came exactly on the 18th, and from there we had a 60-point drop. Now that sets us up for what we're looking for now. Is that where the next move, the next prediction is going to be that we're going to be making some type of low, and I can't give you these lows right now, but we're going to make sure that what's going to happen is sentiment is going to confirm that, as well as our technicals. So let's just go to where we are now with our regular charts here. And if you notice right here, when we had this pop up, what we've been saying was that don't expect this type of move. We were not looking for this type of swing trade, these big moves to the downside. We're looking for chop to take place, where it's going to be a decent little correction that happens, but it's not going to be one of these. We're going to form a range, and it's going to actually frustrate a lot of traders, because they're going to be anticipating this type of move, or if you're bullish, you're going to be anticipating this move, and what's going to happen is we're going to chop around, and people are going to continue to get stopped out. They're going to see decent gains to end up turning into losing trades, or they're going to end up just being stopped out at entry, and it's going to be both on the bullish and the bearish side. So our recommendation has been lower your target levels, meaning that don't swing for the home run. Don't look for a 240-point drop. If you start looking for singles and doubles, which is, anywhere from 30 to 80 points to the downside, you take those. And then what happens is when you get into support, you start layering out of those positions. Wait for the bounce, because right now we're in a top, where we are expecting the top. So the only position that I would be looking to get into is going to be shorting rallies. So you take profits at support, and what I was telling members tonight was if we get down to the 26.46, I'm gonna basically unload most of my short position. I'll leave a little bit open with the stop in place, and if that gets taken out, then we're coming down to the 26.06. And if we go to a 15-minute chart, where my stop is right here at the 26.84. So I got short at the 2700. Is it going to be a huge trade? No. I could have taken profits at these levels, but I'm just letting this run and letting price take me out of this. I'm not going to try to guess it. And what we warned today was that, if the bulls were able to push through the resistance at the 26.83 level, that they were going to get up to the 26.98 and then up to this 26.78, ran right into resistance and pulled back. But now we have bullish divergences on the 15-minute chart, and if we look on the hourly chart, we also have them there. So this short side right now is becoming a little risky, because if we come down and it holds again, most likely we're going to get another set of bullish divergences. And remember, we're not in the swing trade time period. We're in a trading period, and if somebody doesn't like to be in that kind of environment, then you just step aside and you don't make any trades at all. You wait for the next setup to come into play, and then from there you take your trades. So that's really our predictive analytical model that we follow. And as you just saw, these moves, these calls are being done weeks in advance, so you're able to adjust your portfolio when we're about to make a top for the downside. If you're long, then you start scaling out of your long positions. When you're short, you start scaling out of your short positions and look long, and that's it. You could trade both the long side and the short side and make a whole lot of money. And you don't have to be in a whole lot of trades per year. When you're in 200-300 point moves, and they you have to wait for them to come around, and right now that's not really the time period that we're expecting. So with that, hopefully you guys enjoyed this video, and I'll put another one out during the week. Take care now.